The Property Bulletin by London Property, the home of superprime.
The Duke of Westminster, Hugh Grosvenor, remains one of Britain's wealthiest landowners, despite a recent dip in the family fortune. Featured in the Sunday Times Rich List 2025, the Grosvenor family's net worth stands at £9.884 billion, reflecting a decline driven by the cooling value of prime London real estate. The 34-year-old Duke married Olivia Henson in a high-profile ceremony at Chester Cathedral last summer. The Prince of Wales served as an usher, and the bride wore the historic Fabergé myrtle wreath tiara, a family heirloom for over a century. While Olivia, a graduate in Hispanic Studies and Italian from Trinity College Dublin, has married into centuries-old wealth, she's launched her own honey business on the Eaton Hall estate in Cheshire, showing entrepreneurial flair. Educated at Ellesmere College and later at Newcastle University, the Duke studied countryside management before working at BioBean, a now-defunct sustainable energy company. Today he oversees the Grosvenor Estate and its charitable foundation, focusing on children's and young people's mental health. The Grosvenor property empire spans 300 acres of Mayfair and Belgravia, alongside holdings in over 40 cities worldwide, and estates totalling 123,500 acres across Cheshire, Lancashire and Scotland's Ray Forest estate. The family also backs regional urban development, including a £10 million leisure project in Liverpool One, and has pledged to lend £900 million to support UK housing construction. So far, £120 million has helped deliver 1,800 homes in areas like Bath and Canary Wharf. The family business, however, has faced recent challenges. Grosvenor Group's 2023 accounts report net assets of £4.7 billion, down nearly £300 million year-on-year. Despite this, £51.1 million in dividends were distributed, and in January the group sold a 25% stake in a London portfolio to Norwegian investors. Hugh Grosvenor is also a godson of King Charles, a godfather to Prince George, and through his mother Natalia is descended from both Russia's Romanovs and Alexander Pushkin. His sister, Lady Edwina, is married to broadcaster Dan Snow, and both are involved in The Clink, a charity supporting prisoner rehabilitation through hospitality training. Founded over 340 years ago, the Grosvenor family shaped much of Mayfair and Belgravia, transforming farmland and orchards into two of London's most prestigious districts. While today's property climate may be shifting, their legacy remains deeply rooted in Britain's real estate and social fabric. Central London office-focused REITs like British Land have been named the top pick by UBS real estate analysts, thanks to renewed investor interest in the capital. Since early 2025, REITs such as British Land, Great Portland Estates and others have outperformed the European Real Estate Association's index by 3 to 4%, as US investors look to the UK for stability amid uncertainty in the US market. UBS analyst Zachary Gage noted a significant uptick in interest for London office assets, driven by limited prime office supply and strong rental growth. He added that positive sentiment around the UK, helped by symbolic trade deals, is also encouraging investment. British Land, set to report full-year results next week, is expected to post standout performance, especially from its city office and retail warehouse portfolio. UBS sees rental value growth potentially exceeding the company's 3 to 5% guidance. Though vacancy remains a concern, 13.3% in the West End and 23.6% in the city, UBS highlights that British Land is currently trading at the most attractive valuation in its sector over the past decade. A historic £19 million Regent's Park mansion, once home to Charles Dickens during the writing of Great Expectations, could be seized over a £10 million unpaid mortgage. Deborah Fiorentino, 63, ex-wife of Italian aristocrat Giovanni Fiorentino, is being sued by Bank Haviland, a private bank based in Luxembourg. The bank is seeking possession of the Grade 1 listed property over claims she defaulted on a £17.85 million loan, secured against the mansion, a mews house and another property in Hampstead. Fiorentino, a former estate agent with a portfolio of luxury homes, previously lived in Naples and later married celebrity divorce lawyer Raymond Jaws Tooth, whose clients included Irina Abramovich and Sadie Frost. The pair separated in 2008. The mansion, which overlooks Regent's Park's boating lake, is a landmark linked to Dickens' literary legacy. But with the loan allegedly unpaid, the bank has petitioned the court to take possession. A judge is now considering the claim. If successful, the property could be repossessed in what would be one of London's highest-profile mortgage disputes. The UK government has launched the Mansion House Accord, a major initiative to channel more long-term investment into the UK economy via workplace pension schemes. Announced on 13th of May 2025, the Accord sees 17 of the UK's largest pension providers commit to investing at least 10% of their default defined contribution (DC) pension funds into private markets by 2030, with half of that investment going directly into UK projects. Private markets include unlisted equities, infrastructure, property and private debt. The move could impact £252 billion in assets. The aim is to give pension savers better access to long-term returns, while also helping to fund major national priorities like infrastructure, clean energy and housing. The Accord builds on regulatory reforms. The FCA's long-term asset funds, LTAFs regime introduced in 2021, allows pension schemes to invest in illiquid assets such as infrastructure and private equity. The government has linked the Accord to its plan for change, highlighting its potential to finance infrastructure and support its clean power goal, to generate 95% of Britain's electricity from clean sources by 2030. While welcomed by the construction and energy sectors, success will depend on the government ensuring a strong pipeline of investable projects. The upcoming 10-year investment strategy expected in June is set to outline this pipeline. While exact allocations across asset classes remain unclear, the Accord marks a shift towards aligning pension capital with national development goals. If backed by solid investment opportunities and supportive policy, it could be a game-changer for infrastructure and housing delivery. Demand from US buyers for homes in the UK has reached its highest level since 2017, according to new data from Rightmove. Since the start of 2025, inquiries from the US have risen 19% year-on-year, driven by growing economic uncertainty in the US, particularly around President Donald Trump's tariff policies. Edinburgh has overtaken London as the most searched-for location among US buyers. Many are drawn to its cooler climate, cultural appeal, and period architecture. Property experts in the city say the demand is coming from both second home seekers and Americans planning permanent relocations. Popular searches include Georgian townhouses, large flats, and country estates near the city. The political turmoil in the US has certainly expedited plans for many of our clients, said Peter Strang-Steele of Coulters, adding that Edinburgh is a haven for those escaping extreme summer heat and seeking heritage charm. London, particularly Westminster, remains the second most popular spot for US buyers, especially among high-net-worth individuals. Areas like Camden, Islington, Kensington and Chelsea also ranked highly. London continues to be seen as a safe haven for capital, said Glyn Gibb of John D. Wood & Co. Many US clients are looking for short to medium-term relocations driven by political instability at home. While many buyers are searching smaller properties like studios or two-bedroom flats, about one-third are searching for larger 3- or 4-bedroom family homes, suggesting a mix of lifestyle and investment motivations. Analysts point to a combination of factors: the UK's reputation as a stable investment market, Scotland's lower entry prices, and a desire for lifestyle change among wealthy Americans. It's a notable trend, but US interest still represents a small share of total UK property demand, said Colleen Babcock of Rightmove. With political uncertainty in the US set to continue, estate agents expect this transatlantic trend to gain momentum through summer 2025. The UK's rental crisis is set to worsen significantly over the next decade, according to Grainger, the country's largest listed residential landlord. In its half-year results, Grainger projected that rental demand will rise by 20% from 2021 levels by 2031, far outpacing the expected increase in available housing. The private rental market faces growing demand and severe supply constraints, the company said. Grainger currently operates over 9,100 homes across England and Wales and manages £3 billion in residential assets in the UK and Germany. While rental price growth has cooled from its 2023 peak, demand remains intense. According to Zoopla, 12 people now compete for every rental listing, down from record levels in 2022 to 24, but still above pre-pandemic norms. At the same time, affordability is deteriorating. The average cost of renting has surged by £3,000 a year, with average annual rents now at £15,400. Forecasts predict a 3 to 4% rise for rents in 2025. The worsening supply shortage has been exacerbated by years of policy reform, which have made it less viable for many private landlords to remain in the market. Rental stock has stagnated at around 5.5 million homes since 2016. The upcoming Renters' Rights Bill, set to take effect later this year, is expected to increase regulatory burdens and costs for landlords. Stricter energy efficiency rules could force some to sell rather than upgrade. 88% of landlords lack confidence in the sector, and over a third plan to exit this year, said Nathan Emerson, CEO of Property Mark. Grainger noted that while the new bill may raise standards and professionalise the market, it will likely accelerate the departure of smaller landlords, worsening supply issues. One potential solution lies in build-to-rent, large-scale, professionally managed residential developments. Though the sector currently makes up just 2.3% of the rental market, it has strong political backing and growing investor interest. Grainger itself has £1.3 billion and 4,565 homes in its build-to-rent pipeline, but the sector still faces challenges, including a lack of planning policy support at local levels. There's significant capital ready to fund new rental homes, but planning barriers remain, said Ian Fletcher of the British Property Federation. In February, a new build-to-rent task force was launched, bringing together key industry players to push for policy support and investment, but the scale of the challenge is vast. Savills estimates the sector needs £300 billion to meet future demand. Build-to-rent is emerging as a mainstream investment with huge growth potential, said Piers de Winton, head of national investment at Savills. As supply continues to lag and demand shows no signs of slowing, all eyes are on whether institutional investors and policy reform can help ease the UK's deepening rental crunch.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.